And over that time, I've been passionate about visiting France, understanding it, learning about it, learning from it. But mostly, I've been passionate about the debates we have related to the French economy, and importantly, the French's future of France. What's striking to me about these debates, the debates have actually changed. And the debates have changed over the last decade. Today, I think there's a broad agreement around one single idea, that economic growth matters. Economic growth, as it broadens, reduces polarization. I think that sounds obvious now about the need for economic growth, but not so long ago. It was still an open question whether competitiveness would truly sit at the center of France's economic vision. I think that question has been answered, and President Emmanuel Macron has been the key man driving that shift and answering that question. In fact, you could make an argument that no French leader has led his country at a more pivotal time since World War II. From the onset, President Macron has argued that France must strengthen itself. It must strengthen its defense. It must renew itself in its capacity to innovate, but also importantly, and maybe more importantly today than ever before, and remain engaged in the world. That perspective has defined his presidency and is one that is helping to shape the conversation, the needed conversation about Europe's future. Ladies and gentlemen, please join me in welcoming the President of the French Republic, Emmanuel Macron.
Thank you very much, Larry, for your words. Your Majesties, distinguished heads of state and governments, President Lagarde, ministers, ambassadors, business leaders, ladies and gentlemen. I'm extremely happy to be here, and it's great to be here, as the Financial Times would say. And it's a time of peace, stability, and predictability. So let's try to address the key challenge of this world in a few minutes' time. But it's clear that we are reaching a time of instability, of imbalances, both from the security and defense point of view and the economic point of view. Look at the situation where we are. I mean, a shift towards autocracy against democracy, more violence, more than 60 wars in 2024, an absolute record, even if I understood a few of them were fixed. And conflict has become normalized, hybrid, expanding into new domains, space, digital, information, cyber, trade, and so on. It's as well a shift towards a world without rules, where international law is trampled underfoot, and where the only law that seems to matter is that of the strongest, and imperial ambitions are resurfacing. Obviously, the Russian war of aggression against Ukraine, which will enter into its fourth year next month, and conflicts continue in the Middle East and across Africa. This is as well a shift towards a world without effective collective governance, and where multilateralism is weakened by powers that obstruct it or turn away from it, and rules are undermined. And I can multiply the examples of international bodies weakened or left by the key economies. And when we look at the situation, it's clearly a very concerning time, because we are killing the structure where we can fix the situation and the common challenges we have. Without collective governance, cooperation gives way to relentless competition. Competition from the United States of America through trade agreements that undermine our export interests, demand maximum concessions, and openly aim to weaken and subordinate Europe, combined with an endless accumulation of new tariffs that are fundamentally unacceptable, even more so when they are used as leverage against territorial sovereignty. And competition from China, where massive excess capacities or distortive practices threaten to overwhelm entire industrial and commercial sectors. Export control has become more dangerous new tools, destabilizing global trade and the international system. And the answer, in order to fix this issue, is more cooperation and building new approaches. And it's clearly building more economic sovereignty and strategic autonomy, especially for the Europeans, which is for me the core answer. In this context, I want to exclude two approaches. The first approach would be to, I would say, to passively accept the law of the strongest, leading to vassalization and bloc politics. I think accepting a sort of new colonial approach doesn't make sense. And all the head of state and government and business leaders, which would be too complacent with such an approach, will take a huge responsibility. The second will be to adopt a purely moral posture, limiting ourselves to commentary. That path would condemn us to marginalization and powerlessness. Faced with the brutalization of the world, France and Europe must defend an effective multilateralism because it serves our interests and those of all who refuse to submit to the rule of force. And for me, the two answers are, on one side, more sovereignty and more autonomy for the Europeans. On the other side, an efficient multilateralism to deliver results through cooperation. Obviously, France and Europe are attached to national sovereignty and independence, to the United Nations and to its charter. And it's not an old-fashioned way to live multilateralism. It's just not to totally forget what we learned from the Second World War and remain committed to cooperation. And this is also because of those principles that we have decided to join the mutual exercise in Greenland without threatening anyone, but just supporting an ally and another European country, Denmark. Facing this order and this new situation, this year France holds the G7 presidency with a clear ambition to restore the G7 as a forum for frank dialogue among major economies and for collective and cooperative solutions. Trade wars, protectionist escalation, races towards overproduction will only produce losers. This is why addressing global economic imbalances is our key priority. And if we look at the situation, the current imbalances are due to some key phenomena, and we all have to deliver our own agenda. This includes American overconsumption, Chinese underconsumption and overinvestment, and European underinvestment and lack of competitiveness. And these imbalances are also reflected in development gaps, by the way, and we can no longer settle for aid that neither delivers sufficient results nor enables countries to escape poverty. So our objective through the G7 is to demonstrate that the world's major powers are still capable of reaching a shared diagnosis of the global economy and committing to concrete actions. Cooperating is not about blaming others. It is about assuming one's share of responsibility and contributing to solutions. So the objective of this G7 will be to build this framework of cooperation in order to fix the roots of these imbalances and restore efficient convergence and cooperation through multilateral frameworks. And the other objective is as well to build bridges and more cooperations with the emerging countries, the BRICS and the G20, because a fragmentation of this world would not make sense. Here, this point is for, I would say, the global agenda and how see our G7 agenda. On the other side, we have the European answer. And for me, Europe clearly has to fix its key issues: the lack of growth, the lack of GDP per capita growth, and the three pillars of our strategy in order to deliver more sovereignty, more efficiency, and more growth would be based on protection, simplification, and investment. Because the diagnosis is well known, European competitiveness still lags behind that of the US, and in the current global order, facing precisely the Chinese approach, we have to react. So first, protection. Protection doesn't mean protectionism. But today's Europeans are too naive. This is the unique market open to everybody without checking level playing field. Nobody can access the Chinese market as people are accessing the European market for sure. But even if you take the US and a lot of other countries, the level of protection does exist for investment and trade. And the Europeans are the only one not to protect their own companies and their own markets when the other countries doesn't respect level playing field. This is why we have to be much more realistic if we want to protect our chemical industry, our industry, from the automotive sectors to a lot of others, because they are being literally killed by the lack of respect of a normal framework and level playing field. Europe has very strong tools now, and we have to use them when we are not respected and when the rules of the game are not respected, by the way. The anti-coercion mechanism is a powerful instrument, and we should not hesitate to deploy it in today's tough environment. We must also advance the principle of European preference. There is a North American preference in your market. There is no European preference today. We are progressively creating it, and in the latest documents and decisions taken by the decisions, we do have the first examples of that, but this is extremely good. And we are currently aligning closely with Germany to deliver an ambitious and simple framework. And this is a decisive project, and I count on the European Commission to present a proposal as well by early 2026 with the highest possible level of ambition in order to deliver, I would say, across the different sectors, the principle of European preference. This is a necessity. We must act on imports as well regarding this protection issue. And in the context of escalating trade tensions and Asian overcapacities, Europe must strengthen its trade defense instruments, including mirror measures to enforce regulatory standards, and we must improve the quality and added value of foreign direct investments, targeting projects with strong export potential. And this is core for the rebalancing with China. China is welcome, but what we need is more Chinese foreign direct investment in Europe, in some key sectors, to contribute to our growth, to transfer some technologies, and not just to export towards Europe some devices or products which sometimes don't have the same standards or are much more subsidized as the one being produced in Europe. It's not being protectionist, it's just restoring this level playing field and protecting our industry. So from safeguard clauses to mirror clauses to European preferences and incentives for more FDIs, this strategy is absolutely key. And in parallel, protecting our economies will also require a resilient strategy on both imports and exports to de-risk supply chains, particularly for raw materials, rare earths, semiconductors, chips, and to diversify our trade partners. The second pillar of the European economy and the European strategy should be simplification. And when I speak about simplification, we started with CSRD, CSDDD, and we have to do much more on different sectors, and we did it during the past few weeks on automotive, and we have to do it on chemical, digital, AI, banking, and so on. And the core of this simplification is sometimes to get rid of some recent regulations when they desynchronize in a certain way. the European Union in comparison with the rest of the world. But we have as well to accelerate the deepening of the single market. On all these sectors, the 450 million inhabitants and consumers market should be the domestic market of all the EU companies. It's not yet the case as long as you have complexities. In doing so, we must ensure respect, technological neutrality and non-discrimination within the European Union. This is another pillar, another point of simplification. Neutral approach in terms of technology and non-discrimination. We discriminate during such a long time between the different sources of energies. It's counterproductive for the Europeans themselves. Companies have a role to play, and we must act, and you must act. And clearly, you must help identify and concretely help us to simplify where it is needed. But for me, this agenda of simplification is not a matter of discussion, but just implementation, speed and scale. The third pillar of the European strategy for more competitiveness and more autonomy is based on investment and innovation. We have to invest much more. If there is a GDP per capita so different between the US and Europe, 65% to 70% of the explanation is due to the difference in terms of innovation. And the US was much more innovative because of public and private investment. So in our budget for the months to come, because we will negotiate during the years, this year in Europe, we have to invest much more money in the critical sectors where the innovation will be made. AI, quantum, green tech, but as well defense and security. The size of our common budget is not the right one. We have to invest much more money in order to be much more credible and accelerate this innovation agenda. But at the same time, if you look at the situation, we don't have sufficient private investment. And this is one of the main differences. We do have the savings as the Europeans, much more than the US, by the way. But this saving is overinvested in bonds and sometimes in equities, but outside Europe. So this is why the top priority should be securitization program. It is prepared, we have to accelerate the implementation. And second, capital market union. Precisely in order to have more integration and simplification, but to have an efficient capital market union in order to invest much more money and use our savings to be invested on innovation and equity in Europe. This agenda for me is our top priority, both the global and the European one. And it is to be implemented in the months to come, because everything is about acceleration. And France is committed to deliver this agenda. We work very closely with our key partner. And at the same time, our objective for France is to stabilize our results and our macro approach, and to remain the highly attractive country we are. We've been the most attractive country of Europe during the past 6 years, and to consolidate our deep structural reforms and our key advantage. And on top of the business framework we have, I want here to insist on the fact that we have a competitive, stable, low-carbon electricity supply. We exported last year 90 terawatt-hours of electricity, and a low-carbon one, based on our nuclear model. We have world-class innovation and research capabilities, and we will improve them. And we have one of the most vivid and active ecosystem in AI, quantum computing, energy transition, etc., and a lot of the startups and unicorns and large caps of these sectors are with me in my delegation today. And on top of that, let me insist, and I will stop here, on the fact that we have a high-quality infrastructure and large market with strong purchasing power. And we have a place where rule of law and predictability is still the rule of the game. And my guess is that it is largely underpriced by the market. And beyond what you can do in terms of investment, what you can do in terms of strong ambitions, having a place like Europe, which sometimes is too slow, for sure, and needs to be reformed, for sure, but which is predictable, loyal, and where you know that the rule of the game is just the rule of law, it's a good place. And I think this is a good place for today and for tomorrow. So we will be committed during 2026 to try to deliver this global agenda in order to fix global imbalances through more cooperations. And we will do our best in order to have a stronger Europe, much stronger, and more autonomous, based on the pillars I just mentioned, and based as well, and we can revert in the dialogue, but on more investment and commitments on defense and security, because we have to invest much more and invest much more. Because we do believe, and here in the epicenter of this continent, we do believe that we need more growth, we need more stability in this world, but we do prefer respect to bullies, we do prefer science to plotism, and we do prefer rule of law to brutality. You're welcome in Europe, and you are more than welcome to France.
President, what I'd really like to ask you is, how has your last few days been? But importantly, though, you framed out an economic direction for France and for Europe. If you had to prioritize to transform France and Europe as fast as possible, you close saying, yes, we are slow, yes, but what can we do right now to really accelerate it, to broaden the economies across Europe, that we have more participants? Is there any one silver bullet that you could do to really accelerate that type of growth?
Rapid response in terms of, this is a no. And by the way, Maria, this has been in the minds of American presidents for more than 150 years. For more than 150 years.
So the vulnerability was seen even back then?
Well, or the strategic value of Greenland. And I think as there are more trade routes that move near Greenland, Greenland becomes more and more valuable.
Secretary, we're already seeing a reaction from markets. You've got rates spiking in the United States, up 7 basis points on the 10-year right now. You've got rates spiking in Japan. What do you want to say about this market reaction that we're seeing?
Well, Maria, I think it's very difficult to disaggregate the market reaction from what's going on endogenously in Japan. So Japan, over the past 2 days, has had a 6 standard deviation move in their bond market. That would be what has happened in the Japanese JGB 10-year would be the equivalent of a 50 basis point move in US 10. So I think it's very difficult to disaggregate what the spillover from Japan is. I've been in touch with my economic counterparts in Japan, and I am sure that they will begin saying the things that will calm the market down.
So what are the plans for tariffs on Europe then?
Well, we're in the midst of completing a very good trade deal. Is to go ahead with the trade deal. Of course, the president has said that he, on February 1st, will implement a 10% tariff if the Danes do not want to give up Greenland, and it is on the 8 countries that sent troops to Greenland.
So what do you want to say about the NATO alliance then? I mean, Denmark has been a long ally, the European Union united against any move. How do you progress with what looks like a strategic move for the United States, but also preserve the alliance, the NATO alliance?
Well, look, I think that the NATO alliance is very safe, sound, and thanks to President Trump, it's never been more secure. When President Trump came in his first term, the European countries and Canada were not meeting their spending quotas as a percent of GDP. Now they got a lot of catch up to do. And Maria, to put it in perspective, the United States of America since 1980 has contributed $22 trillion more dollars, or spent $22 trillion more dollars on defense than all of NATO. So roughly the same size population, and we have spent $22 trillion more. That is 2/3 of our outstanding government debt. Europeans have been spending the money on social welfare, on roads, on education, and it's time for them to pay more, which they've agreed to do.
Yeah, many of them have already stepped up, like Poland.
Everyone has except Spain.
Okay. And do you not feel that a security deal in the Arctic would suffice in terms of Greenland?
Well, I think what we're seeing, we're seeing with a base that we have shared with the UK for many years, the UK is signing the island over to Mauritius. So again, I can see why the president believes that for U.S. engagement, we do not want another Diego Garcia on our hands.
This is a very important point that you make. In terms of tariffs, how much money has been generated from tariffs already? Certainly the hysteria over President Trump's tariffs have died down since April of last year. What is the total running rate right now?
Yeah, it's in the hundreds of millions of dollars, Maria. The U.S. for the fiscal year, which ends September 30th, we had a fiscal contraction. For the calendar year, we had a very large fiscal contraction. So we cut the deficit by about $200 billion. The important number is the deficit to GDP. So calendar year 2024 was 6.9%, the highest we've ever had. I mean, we inherited a mess. 6.9%, the highest we've ever had when the U.S. was not at war or not in a recession. So 6.9%, calendar year 2025, 5.4%. I have called for getting that number down to 3% by the end of President Trump's term, and I think we're on the way.
So you've been using that tariff money to pay down the deficit then?
It feeds into the general account, and it's been a big part of it. And again, last year, the U.S. 10-year bond was down about 40 basis points. I believe France was up about 40 or 50, Germany was up 50 or 60. U.S. bond market had its best performing year since 2020. And again, back to your point that after Liberation Day, April, May, it's the end of the world. The world's going to sell U.S. assets. Just the opposite happened is, as Treasury Secretary, I can see who the buyers are of our bonds. And we had more foreign participation than ever.
And just to be clear, a moment ago, when I asked you about the market reaction, you don't think markets rates are spiking on this Greenland story. You think that what's happening in Japan is specific to Japan.
Well, I think that the Japan situation, that the market there, again, had a 6 standard deviation move, and that was happening before any of the Greenland news. And I think the rest of the world, German rates are up, French rates are up, Japanese rates are up a tremendous amount.
Secretary, I want to get to the macro story in a moment, but let me stay on tariffs for one more moment, because we could be hearing from the Supreme Court imminently. And of course, the Supreme Court will issue a ruling on the president's use of tariffs during a, quote, emergency, the IEEPA, reason that you've actually issued some of these tariffs. What are your expectations for the Supreme Court? We could hear from them this morning or even tomorrow morning. If they rule against you, what are the alternatives to raise that kind of revenue, hundreds of billions of dollars that you've already been able to do?
Well, Maria, I think it's very unlikely that the Supreme Court is going to strike down a president's signature economic policy. It didn't early on with the ACA, also known as Obamacare. They reinforced that recently. And the real problem here is President Trump has used IEEPA for negotiating leverage for geopolitics in emergency situations. If we look back, the first IEEPA tariffs were fentanyl tariffs. So on Mexico, on Canada, on China. And if fentanyl is not a national emergency, I don't know what was. 200,000 Americans dying every year. And because of that, Mexico came to the table, Canada came to the table, China, who exports or the precursor drugs, have all come to the table. And we're seeing a substantial drop in protecting the American people. On October 8th, the Chinese government announced rare earth export controls on the entire world, not just the US, and which would have caused an industrial meltdown. President threatened 100% tariffs on China if they did this. My Chinese counterpart, who's been a very good interlocutor, had gone quiet for a couple of days. Chinese immediately came to the table, and they rolled the export controls out a year. And President Trump insisted that I negotiate on behalf of the whole world. So, in terms of the U.S. leading, this is what U.S. leadership looks like. He was able to use IEEPA tariffs to negotiate for the entire industrial world. So I think it's very important here.
I'm glad you mentioned China. I'm going to come back to China, but while we're here, what is the latest timetable on the much anticipated bilateral trade deal with China?
I had a meeting with my Chinese counterpart here in Davos last night, Vice Premier Hu Lifeng. He told me that just this week they have completed their soybean purchases, and we're looking forward to next year's 25 million tons. I suggested maybe he'd want to buy a little more, because President Trump always brings that up with Party Chair Xi when they speak, and they've done everything that they said they're going to do.
Are they having rare earth magnets flow, or are they putting restrictions on that? Because there were reports last year that the Chinese were saying, we will send the rare earths, but we're not sending them to any companies that are tied to the defense sector and the U.S. military.
They are flowing as expected. We are in a fulfillment rate that's in the 90s, which I think is quite satisfactory.
So they didn't stop, even if it's a defense company? Because I believe they tried to do that with Japan as well.
Well, Japan and China have gotten in a skirmish over some remarks that the Japanese prime minister made. So the U.S. is immune from that.
Okay, let's talk macro. The U.S. economy seems to have been doing much better than many expected. We had a 4.3% read in GDP last quarter. How would you assess the United States economy?
I think that it is very strong and likely accelerating. And Maria, just to be clear, that 4.3% GDP was private sector GDP. So, or actually after the fiscal contraction. So the real number was 4.7. The government contracted by 0.4, so that got us to 0.3. So that is pure private sector GDP. And President Trump's economic policy, tax deals, trade deals, and deregulation, the deregulation, which I think is probably the most powerful part, is really just starting to kick in now. So we have the tax deal, one big beautiful bill, done on July 4th, which no one said could be done. And it contains the full expensing for U.S. corporates on equipment, for factories, for ag structures. On the other side, for working Americans, the president's signature policies: no tax on tips, no tax on overtime, no tax on Social Security, interest deductibility, auto loans if you buy an American car. So we're seeing this wonderful balance between industrial America and Main Street America. I am also the IRS commissioner, and we did not change the withholding guidance. So we're going to see, as commissioner, I can see there are going to be very substantial tax refunds coming to working Americans in the first quarter. They'll change their withholding. They'll get a bump up in real incomes. Because of the expensing, we're seeing 12, 14% CapEx growth in the U.S., and historically, you have never seen a CapEx boom without seeing employment follow.
Yeah, you've got a CapEx boom and a productivity boom as well. 4.7% is much better than so many people expected last year. Are you expecting the economy to, at one point, hit 5% as well?
Well, the Atlanta Fed GDP number, which is a very noisy number, is now reading 5.3 because remember, the fourth quarter GDP included the Schumer shutdown. So some of that will be pushed into the first quarter. So I'm expecting that we could be well north of 3, and we'll have inflation coming down. As you said, productivity is very high, and we have measured inflation and observed inflation, and with the observed inflation, I think we can see that prices are already down, and that will trickle into the CPI and the PCE, which the Fed looks at.
Well, it's a good point because there is still a perception that prices are still high.
Well, prices are high. The Biden administration was a wipeout for working Americans. That the price level increased by 21, 22, 23%. But our friend Jason Trennard, the strategist, has something called the Common Man Index, and that is what do working Americans buy? So basket of groceries, insurance, rent, car payments, and that was up in the mid-30s. So very difficult, other than with energy. The president, through Drill Baby Drill, has gotten gasoline prices down. We're below $2 in many states. National average is below 3, even if you throw in the outlier of California. And so that we can get down. And we are working every day to get things down. And affordability is two pieces. Affordability is price level, but it's real incomes. Real incomes have gone up every month since President Trump took office. And as I said, I think we're going to see a big year for real incomes this year.
Wow. And you said in terms of the tax refunds, are we talking about thousands of dollars that people will be getting as a result?
We could see, for working families, for each wage earner, we could see up to $1,000 per wage earner.
Okay. You said that prices are still coming down, but they're still elevated. The president announced many things, a litany of things, just in the last 100 days. And I want you to walk through some of these things and tell us why they're important, because he put a ban on large institutional investors purchasing single-family homes. He asked for $200 billion purchases of mortgage-backed securities, and he put on a proposal for a 10% cap on credit card interest rates. We know credit card interest rates are always soaring, up to 28, 30% in some cases. That's going to cut into earnings of the bank, certainly. And he also teased something about 401ks, that you would be able to tap into your 401k to then buy a home. Walk us through these things. Why are these so key, in your view, to growth and to reining in prices?
Well, here, why don't we start from the beginning? So,
the first thing was the ban on large institutional investors purchasing single-family homes and the purchase of mortgage-backed securities.
Yep. So the ban on institutional investors in single-family homes, for those of you who are not American, in the U.S., pre-Great Financial Crisis, institutional investors did not participate in the single-family market. So post the financial crisis, institutional investors hoovered up single-family homes. They continue to do it, and there's an unfair tax arbitrage there. You and I have a mortgage. We can deduct the mortgage amount. Institutional investors can deduct the borrowing amount, but they can also expense any repairs and depreciation. So we think that it is a good idea to have them out of the market. We are going to give guidance at some point to see what is a mom and pop, that someone, maybe your parents for their retirement, have bought 5, 10, 12 homes. So we don't want to push the mom and pops out. We just want to push everyone else out. And what's important here, you will hear some misinformation that says, well, institutional investors are 1, 2, 3%. That is true. Having been in markets for 35 or 40 years, markets are made on the margin, and institutional investors are much higher in boomtown markets like Charlotte, like Atlanta, like Huntsville, Alabama. So they've done that. In terms of having Fannie and Freddie buy MBS, the mortgages are two parts. It is the 10-year bond yield, and it is the spread between mortgages and the 10-year yield. So the purpose of that is to narrow the spread.
Okay. The cap on credit card rates is expected to cut into bank earnings between 5 and 18%. Your reaction?
We've done a lot this year. Bank stocks are at a new high. That through my position on FSOC, the Financial Stability Oversight Council, and the three bank regulators, the Federal Reserve, the OCC, the FDIC, we have done a lot to deregulate banks. Their earnings are way up. More importantly, it has increased their lending capacity. Oliver Wyman's numbers, not mine, estimates that there's 2.5 trillion of extra lending capacity. The other thing that has been a focus of this administration and a focus of mine is small and community banks, because what happened after the great financial crisis, all the regulations from Dodd-Frank, we had too big to fail. But then with small banks, you were too small to succeed. This regulatory morass, we have lost more than 50% of the small and community banks. And they power small business lending, real estate lending, and ag lending. So we are trying to bring that back.
Yeah, it's a great point, because farmers really need the lending of these small community banks. Look, Secretary, I want to get your take overall on your thoughts on what you've done so far, because the president back last year, right after the inauguration, I sat down with the president and I asked him what he wants the economy to look like in 4 years when he's done. And he was very clear. He said he wants private enterprise to rule the day. 1 year later, you've taken a 10% stake in Intel. You've taken a stake in MP. Now, I know that these are national security issues. And the other day, the president told the defense contractors, don't pay dividends, don't buy back any of your stock. You need to be fulfilling what the country needs in terms of producing weapons. So what do you want to say to people who say, look, here is a so-called capitalist president and a Treasury Secretary, and yet it's not private enterprise running things. The president is telling the defense contractors what to do, and you've taken stakes in these companies.
A couple of things, Maria. I think the only good thing that came from COVID was it was a test run for what would happen if our supply chains were ever broken due to a kinetic war. So we saw that there are 5, 6, 7 key industries that we have to reshore. So everything you just said, rare earth magnets, we've got to get out from under China's grasp. The semiconductors, I would say that the single biggest threat to the world economy, the single biggest point of single failure, is that 97% of the high-end chips are made in Taiwan. If that island were blockaded, that capacity were destroyed, it would be an economic apocalypse. So we are reshoring the semiconductor industry to the U.S. With the defense contractors are no different than the systemically important banks. They exist, like the systemically important banks exist because of the backstop from the Fed, because of the regulations. And these defense contractors have let down the American people. They have let down the American people. They are 5, 6, 7 years behind on fulfillment of their contracts, and they exist because of the U.S. Department of War. So I do not think it is unreasonable to tell them that until further notice, you need to build more factories and buy back less stock. And by the way, Maria, these CEOs making $30, $50 million a year for failing the American people. So I don't see any discrepancy there. And it's, as you said, everything on your list is national defense. And so once they get to some normalized level of backlog, I don't know whether it's 2 years, 3 years, then we can talk about removing those restrictions.
So what you're saying is you want private enterprise to lead the day, but when it comes to national security, the government will be a shareholder.
And again, a lot of this isn't private. You know, we have seen what happens when the free markets get kind of perverted, because what happens with critical minerals, that several companies have tried to stand up critical minerals facilities in the U.S., and the Chinese come, lower price, undercut them, and then they're bankrupt. So we have to we are going to put in a system, price floor, price ceilings, and when you talk about multilateralism and the U.S. leading, I just hosted at Treasury last Monday the G7++, so G7 plus Australia, plus India, plus Mexico, plus South Korea, and we are working at warp speed to create a critical minerals block where we can mine, process, and refine critical minerals, and China won't have this sword over our heads.
So how long do you think it will be until the United States is, in fact, independent in terms of the refinement of these minerals, independent in terms of oil, et cetera? I mean, I know that the U.S. is the largest producer anyway, but do you expect this year, next year, what's your timetable in terms of the U.S. not relying on China for these things?
Well, obviously for energy, we are independent. We're an energy superpower, and I would say 18 to 24 months. I went down about 2 months ago to my home state of South Carolina, and in South Carolina, for the first time in 25 years, there's a producer there who made rare earth magnets. So they are starting to come off the supply chain. They believe that within 2 years, they can fulfill most of the rare earth magnet needs for the U.S. And then we also want to help our allies because the supply chain is important.
Mm-hmm. What do you want to say about sanctions, something else you've been working on, of course. What are you planning there in terms of Iran and the impact there? Do sanctions actually work? And the same question with regard to 500% secondary sanctions or tariffs on countries who purchase energy products from Russia.
Okay, so two things there. There are Treasury sanctions. And if you look at a speech that I gave at the Economic Club of New York last March, I said that I believe the Iranian currency was on the verge of collapse, that if I were an Iranian citizen, I would take my money out. President Trump ordered Treasury and our OFAC division, Office of Foreign Asset Control, to put maximum pressure on Iran, and it's worked. Because in December, their economy collapsed. We saw a major bank go under. The central bank has started to print money. There is a dollar shortage. They are not able to get imports, and this is why the people took to the street. So this is economic statecraft. No shots fired, and things are moving in a very positive way here. On the 500% tariffs on the buyers of Russian oil, that is a proposal that Senator Graham has in front of the Senate, and we will see whether that passes. We don't believe that President Trump needs that authority, that he can do it under IEEPA, but that the Senate wants to give him that authority. And just to be clear, that we have Europe buying Russian oil still 4 years later, they are financing the war against themselves. India started buying Russian oil after the conflict began, but President Trump put a 25% tariff on them, and India has geared down and has stopped buying Russian oil. And then 3, China is a very large buyer of Russian oil, as they are of Iranian oil, as they were of Venezuelan oil. But guess what, Maria? No more Venezuelan oil for them.
So would you treat China the same as the others in terms of buying Russian oil with regard to tariffs and sanctions?
Well, we'll see what happens with this Senate bill, and with the Iranian oil, that'll be up to President Trump.
Secretary, what do you want to say about artificial intelligence and the idea that AI efficiencies will likely kill jobs? A lot of people are worried about jobs. Do we have a plan in the U.S. government right now in terms of job creation in the face of AI efficiency killing jobs?
Well, Maria, we are seeing the record factory groundbreakings. That's why President Trump wants to bring back these precision jobs to the U.S. And historically, every productivity boom has led to job growth. Now, can there be some toing and froing in terms of people changing professions? I can't remember what the number it is. Maybe you know it. 50, 60% of the professions today didn't exist 30 years ago.
Well, it's a
So
big number.
it's-
Technology.
It's a big number, but it's something we're very cognizant of. We haven't seen it in the numbers yet. I think that it could be very different than what we saw with the China shock. The China shock was a blue-collar phenomenon. My guess is the AI shock might be a white-collar phenomenon. We'll see.
Secretary, as we wrap up here, a moment ago, you said, look, you've been dealing with markets for a long time, your entire career. What do you think of markets today? I mean, the market has been rallying on the president's policy. Today, of course, we're seeing a sell-off, but do you think the markets are getting it right in terms of rallying on the president's policies going into this Davos meeting?
I try not to the extent I had success in the markets, it was not making short-term predictions. But I can tell you what has been very heartening for me. I don't have time to follow the markets as closely, but to the extent last year before, everyone said, oh, this is just Mag 7 stocks, it's not healthy. We've seen a big broadening out in the market. The Russell index of smaller cap stocks has outperformed. The S&P equal weight has outperformed. And I actually think that speaks to the economic recovery. We're seeing it across all sectors. Our friend Ed Hyman at ISI does these corporate surveys. Corporate surveys are the highest that they've been since June 22. And I think you're starting to see it in all sectors of the market. And the market follows the economy. And again, I just think that we have the best place in the world. Come, build your factory. You have tax certainty, you have regulatory certainty, and you have energy certainty.
And of course, deregulation. And that was one point that I wanted to make before we wrap up here, that Mario Draghi wrote a report 2 years ago about regulation in Europe and the fact that the largest market cap company in Europe is Novo Nordisk because of Ozempic, about $400 billion or so. And we just saw NVIDIA in the United States hit $5 trillion.
Well, clearly, Maria, the innovation, the change, and the ability to adapt is in the U.S. The U.S. is the innovation capital of the world. I don't think anything's going to change that. I was just asked in another meeting by some business leaders, what advice would you give to Europe? And I said I would operationalize the Draghi report, because the EU was supposed to cut down on red tape, but it is logarithmically increased it. When I talk to tech executives, they will tell me it is easier doing business in China than the EU.
Wow.
That's not a great stat. I had a European businessman come to see me the other day. He said, Secretary Bessent, it took me 3 days to get an appointment with the White House and with you. It took me 90 days to get an appointment with Ursula von der Leyen, and we are one of the largest employers in Europe. So there's just a different mindset here, and I think the mindset has got to change. It's got to change to a growth mentality, and that's President Trump's invitation is we are growing, we're deregulating, and come and join us. The U.S. is going to host the G20 meeting next year, and on the finance track, we have identified the greatest financial risk as a lack of growth, because post-COVID, every government balance sheet has ballooned, and we have this gigantic government debt. There are two ways. You can either cut your way out of it through austerity, no voter wants that, or you can grow your way out of it. So we are inviting the world, come grow with us, prosper with us, and we can all do it together.
Secretary, thank you very much.
Good.
U.S. Treasury Secretary Scott Bessent, thank you so much.
Thanks, Maria.